Silvergate Bank, one of the largest cryptocurrency banks in the world, have declared complete liquidation. They've officially collapsed, and this has resulted in the cryptocurrency market taking a significant nosedive. We have seen Bitcoin fall below the 21,500 major support level and reaching that next target of 20,000. We're going to discuss the implications of this in today's video, the macro charts, the short term, the economic data, and upcoming news events. Let's go ahead and get into it. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day. We're here to talk about Bitcoin, of course, discussing the recent price action, the move toward the downside, the current support ranges, expected bounce points, lower targets, short-term price action, technical analysis, economic data, economic news, and everything in between. We have a lot to talk about. It is going to be a busy month. We have so much upcoming, and we've already had so much happen. Before we get into it, smash the like button, hit the comment button, subscribe to the channel, guys. We do daily videos for Bitcoin, focusing on the data, focusing on the charts, no emotion, no bias, just purely technical analysis and economic data. If you're interested in that kind of stuff, this is a channel for you. You can also find us on Telegram. This will be a second link down below. We post news events, we post charts, we post updates, we post everything in between. You can find all information for all that kind of stuff, including all of our videos in here. If you're interested in trading and want to join the VIP channel, you can see the VIP channel here. We have 524 users in there at the moment. So massive short profits, 187% on our Matic short, 256 on our ZIL short, and 148% on our OP short. Absolutely huge, guys. If you're interested in joining here, where we get entries, you get targets, you get stop losses, you get access to our group chat, you can go ahead and get more information in that free channel via the pinned comment. It's going to be up in the pinned comment, guys. Go ahead and join up, and you can find all the information over here. Let's get into the video and talk about what is going on. Starting off with this, and I want to talk about the Silvergate Bank. And this bank just announced not too long ago, this was about 12 hours ago now, maybe a little bit less than 12, about 10, 11 hours ago, they've announced they're going to be closing down. Basically, they've announced their bank has collapsed. They're going to be liquidating its assets. You can see over here, they announced on Wednesday that they'll wind down operations and liquidate the bank. So basically liquidating their assets. So a lot of people are going to lose money here. A lot of money has been locked in there. And basically this is a very bad sign for not only cryptocurrency, but other banks as well. Generally, all banks are kind of tied in together. They have money parked in different assets from different banks. They have loans all over the place. Generally, when one bank collapses, we do see other banks get negatively impacted as well. It's not just, okay, this bank went down, sucked in, there goes competition. No, they're all kind of tied in. They're all kind of connected. It affects other individuals. It affects companies, which again influences their ability to pay off debts from other banks. It's all tied in, guys. The system is all connected. This is not a good look for crypto, not a good look for the broader markets as a whole. And as a consequence, we have seen the markets correct. But let's start off with the economic data and then get into that kind of stuff, or should I say the Bitcoin data. Currently, March is negative 13.16%. Again, guys, this stuff is not like shocking. We have not been shocked by any of this. If you've been watching the channel, you would know we expected March to be red. We said March was going to be a red month. We printed a DOWJ candle, guys. We printed a DOWJ candle at a rejection point of the 50 EMA on the monthly chart. So 50 EMA, we had a DOWJ candle rejection at the 50 EMA, representing exhaustion, representing a lack of momentum, volume, and volatility, representing a very high degree chance that we're going to see a strong rejection and reversal from 25K, which is exactly what we have seen. Remember, the charts paint a story. The charts tell you, they're visual representations of what is happening in the economy, what is happening in the market, what the price is going to do. If you can learn to read the charts, you can put yourself in more favorable and probable positions for positive outcomes. So that is what's happened there, guys. We have seen that move toward the downside. Obviously, negative 13% for a month. We're 10 days in. We have 20 days to go. It is not looking amazing for March. We do expect March to be closing out red. Volume is up 69% to 126 billion. Liquidations, guys, $303 million. $303 million in 24-hour liquidations, the majority of that coming from longs, coming from late longs, people who longed at 25K, people who longed at resistance, guys. We're looking at these people now being absolutely destroyed in their positions as Bitcoin lost that psychological level of 20,000. We're seeing the 21.5K breakdown here, hundreds of millions of dollars in longs liquidated. We're seeing the $20,000 breakdown over here. Again, multiple tens of millions of dollars liquidated in these positions, obviously not looking very good. The volatility index 30-day period 2.87, a huge spike in volatility as the price corrected toward the downside, and 60-day volatility is still on the rise to 2.76. Overall, guys, not a good look for crypto, and it is not looking good for anyone who had these late longs. They're probably under a lot of pressure right now, if not already liquidated. Let's take a look at the broader market. So DXY did kind of what we've said. We've said in our last video, we're at resistance here, around 106. We're likely to find some degree of a pullback towards that next support. We have come down to retest the 105 level. This is a very crucial level to hold. The DXY should hold on to this level. A loss of this level could result in some degree of recovery for both the traditional markets and, of course, the Bitcoin or cryptocurrency market. We do have NFP data coming out today, which we'll talk about in a second, which could heavily influence the DXY. If NFP comes out very, very poor, we could see an impact on DXY. If it comes out very, very positive, again, we could see an impact on DXY. We'll talk about that later. But again, with this economic data coming out, just be aware it can influence the DXY, and the DXY does kind of influence the rest of the markets, as the strength of a dollar really does determine the cost of assets in the economy. So moving on, guys, we have seen the Dow Jones take that next leg toward the downside. Hasn't quite hit our second target, right? We got rejected. We hit our first target. Our second target is 32,000. We're not quite there yet. We actually dropped down to about 32,170. So just shy of that target. Still on the way down. Still holding our target down at 32,000. So far, so good. S&P 500 did hit our second target. Remember, our first target was going to be 4,000. Our second target was this downtrending support. We've hit that downtrending support. We have bounced there. It's going to be interesting to see the reaction. If we lose the support level, guys, we are heading very low. We're heading all the way back down to 3,720, and that could of course drag Bitcoin down with it, as they are correlated. Moving on to bond yields, we have seen bond yields print a bearish divergence and get rejected from the 5% level. Again, a critical level to reject from, but not too much to worry about. Again, bond yields are leading for the economy, leading for the strength of the dollar. If we do see this news events be in favor of the dollar rising, the bond yields will also rise. So do keep your eyes on that. But also, if we do continue all the way down, we could potentially see a reversal on our hands. But again, with the state of the economy, with the situation with economic data, the narrative and message being pushed currently, it is looking like more pain is more likely to come. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. But that doesn't take away from the fact that we are a support, and support is support until it's not, and therefore we should be looking for potential reversals. As we said in yesterday's video, we're at 21.5k, we're at 21.8k. The probability was we were going to continue down to our next target. If you remember, our targets have been these low levels this entire time. Since 25k, we've been saying we're bearish. Since 25k, we said we've got a double top. We have a resistance on the 200 moving average on the weekly. We have a resistance on the 50 EMA on the monthly. We have a DOWJ candle print. We have a Gaussian channel resistance. We have decreasing momentum. We have decreasing volume. We have decreasing volatility. We have decreasing liquidity. Absolutely everything from a technical, absolutely everything from a structural stance. whether it be the rising wedge or the horizontal resistance, was pointing for a correction, was pointing toward the downside. We had been very, very utmost and very clear in our analysis for the last couple of weeks, or actually all in general, really, saying that a rejection was coming. And we weren't just the kind of people who say, you know, we're going down now. We were bullish since this bottom. We were bullish from the breakout point here, 225K. We expected that rally, and we flipped bearish at the top, guys. But the charts tell you what is happening, and the charts are not lying. This is a very obvious rejection point. If you did not see it, you were not looking at the data in front of you. You were looking at lagging indicators to support biased claims of continuations after a 66% move towards resistance. Okay, you have to treat resistance as a resistance. You have to treat support as support. So in today's video, yes, we're going to be discussing a potential for a bounce at 20k, but that doesn't mean we're going to bounce. The narrative is still down, the price direction is still down, the possibility for further correction is still more probable. But when you are at support, you have to open your mind to potential for a bounce, and that we're going to be talking about. But let's talk about, first and foremost, guys, the next targets for Bitcoin. Where can Bitcoin go next? Based on a measured move from the current structure, we can see a breakdown from that point takes us, according to our measured move, to a price target of 17,887 exactly. That is going to be the price target. As you can see, this kind of matches up with this local low here and our local high and our breakout point of the neckline. This is going to be a very, very viable target for Bitcoin as a low point for this entire move toward the downside. Now, it is also unreasonable to assume that the price will just directly continue without seeing any sort of bounce, any sort of retracement back upwards. It is very unlikely to assume that we're just going to see a 22% correction toward the downside, but it is possible. So our next targets are as follows: $18,000 or whereabouts at this line, and of course the weekly POC, which sits at 19,200. These are our two next lower targets, 19,200 and $18,000, guys. Those are the next two lower targets. Looking from a measured move perspective, like I said, it does validate that, okay? We see validation from that. And looking from a structural perspective, looking at our volume ranges, looking at our prior support levels, again, we can get confirmation and validation on those levels if we go ahead and move this to 200. I'll show you in just a second. Let's go 200. You can see on these levels right here, validation from that point, 18,000, right? We see a little bit of a jump up over here, and immediately we have this gap in the volume signifying at this point here, we're most likely to fill and find some support. At the 19,200, you can see a huge mountain on the VRPV here, suggesting a significant increase in historical trading orders at that level, which depicts a high amount of support at that particular horizontal range, and therefore these two levels are going to be our support zones. I've said this before and I'll say it again. If we do happen to lose $18,000, we are very likely to continue toward the downside. And I'm going to go ahead and show you on a weekly chart what that could potentially look like for Bitcoin. If we go ahead and lose $18,000, which is going to be this level right here, we will be losing the 2017 all-time high. We will be losing the pinch zone in December 2020, okay? And we will be most likely pushing towards a new low, which could potentially take us anywhere between $12,000, okay, and $13,900. The zone right over here, okay, between the neckline of the resistance range that we remained under. This was our bear market resistance, or should I say our reversal resistance, with span time of 1,000 days, okay, to the local top point of that first rally after the bear market bottom to July 19. Okay, guys, that is the range we're looking at for an absolute bottom for Bitcoin. If and only if we lose $18,000, we can expect those targets to potentially play out. Okay, again, the VRPV does suggest this area over here is absolutely significant support. Not only does it suggest that, we can see 19,200 is in fact the strongest level of support on the weekly chart to have ever existed on the Bitcoin chart. So 19,200 is going to be the major support, a major trigger for a correction to 18,000, a loss of 18,000, and we will be deviating below this trigger point here and the 2017 all-time high, which will result in a continued move toward the downside. Very scary stuff, but stuff we do have to be aware of and be paying very close attention to over the next couple of weeks. And again, what can cause this move? We have economic data coming out, right? We have NFP. I'm going to go ahead and bring on Telegram, actually. I'll show you on the Telegram. We have all of the economic data here. We have NFP, we have unemployment rates, we have core CPI, inflation rate, we have PPI, and we have the FOMC decision. We have 6 interest rate or 6 major economic pieces of news coming out within the next 13 days. All of these pieces of information can shift the narrative and shift the price action in directions toward the downside or reverse the price action. Keep your eyes on this. It's going to be a very, very big month and an incredibly determining month for the next move for Bitcoin on a macro scale. So let's go back to this chart on the daily and talk about the TA, and then we'll go to a smaller time frame, discuss the short term, discuss what is happening with the price action at 20K, talk about the potential for a bounce, talk about potential for a short-term move toward the downside again, do a TA on the short term, and then go back to that weekly chart and wrap it up. So guys, let's go ahead and delete everything off the chart, bring up our technical indicators. We're going to go ahead and start with 2 indicators I really like. First and foremost, the market cipher A. As you can see, we have rejected and lost the 50 on the daily. This is signifying we are now in a strong downtrend. Okay, we are an aggressive downtrend. The small time frame movers are pushing below the 50 and the price is well below the 50. Moving on to a 2-day chart, we can see exactly the same thing. We have dropped below that 50 MA on the 2-day chart, again resulting in a strong downtrend. On the 3-day chart, we can see exactly the same thing. We have dropped the 50. So you're seeing a common trend over here, guys. The higher time frames are now suggesting a downtrend has initiated. And like I said, weeks and weeks and weeks ago, the downtrend will be confirmed upon a loss of 21,500 to 21,800, which is exactly what we are now seeing. The downtrend for Bitcoin at the moment, ever since the rejection from 25K, it has been developing and it has been validated and confirmed since the loss of 21.5K. We are now in fact in that downtrending structure. Moving on to the Ichimoku cloud, we can see on the daily chart, guys, we have lost the clouds. We have dropped below the Ichimoku cloud, signifying again we are now in a downtrend. I would like to point out the momentum indicator. The lagging span is above the clouds. The baseline is in fact actually above the clouds, and the conversion line is within the clouds. We are now opening a red cloud. So overall, it is looking like the downtrend is now developing on the higher time frames, and we are moving toward the downside. If we look at this on a higher time frame, such as a 3-day chart, you can see we're pushed back into the clouds, and again, our clouds do provide support all the way until 18,000, guys. No coincidence. So this area over here we're entering now, between 20,000 and 18,000, we can expect some degree of support to be found, some possible bounce to be made within this level. And I can show you prior examples of that. Let's go ahead and take a look on a weekly chart. When we come back to the macro, we'll show you examples. Here's a perfect example. You can see how these clouds can provide a decent amount of support when you actually break above and then push back into them. So they can act as areas of support if you're moving from the top side back into them, such as the scenario here. We do have to keep our eyes on that as well. Let's go ahead and take a look at our momentum indicators, starting with the MACD. So MACD, moving average convergence, divergence over here, that is what it is called. On the 3-day chart, we have obviously broken that cross toward the downside. This is signifying now momentum is massively weakening on the higher time frame, not a very good sight to see. On the daily chart, we have seen momentum has now crossed actually officially into the negative as it has lost that 0 point on the histogram. Not again a very good sight. On the weekly chart, we can see the momentum is converging toward the downside. We've had multiple consecutive light green candles in a row now, signifying weakening positive momentum. Right now on the higher time frames, there is weakening positive momentum, and that weakening positive momentum is going to continue downwards if the short term does in fact continue downwards, and the higher time frames are going to look worse and worse and worse and worse if we do not get any sort of bounce on the smaller time frames at these levels. Let's go ahead and talk about the RSI. So the RSI, guys, let's bring up the RSI. You can see on the RSI on the weekly chart, We broke out of that falling wedge right over here. Obviously, we had a significant rally towards the upside. A potential retest of this falling wedge could be in due over the next couple of weeks, so keep your eyes on that. On the daily chart, we can see the RSI has dropped into that oversold territory. Again, nothing too interesting right now. Prices can remain oversold for quite an extended period of time. Such example, I'll give you an example over here. You can see the price on the RSI entered the oversold territory over here at 34,000, and it actually continued downwards all the way to 18,000. So just because it's oversold in the RSI, it doesn't mean we're going to bounce. It does not mean we're going to bounce at all. In fact, we can remain oversold for an extended period of time, guys. On higher time frames, you have to look at the smaller time frames. So we're oversold in the RSI here right now. What I'll be looking for is divergences, discrepancies, which claims or bounces back over the 30 point on the daily to suggest any sort of bounces occurring. That is it for high time frames. Let's go down to a smaller time frame and discuss. So Bitcoin has actually now lost that 21.5. We've entered the 20,000 range. We are currently finding support on 20,000. We do have an uptrending support line over here, which has been developed. I would not expect the next move to continue towards the downside until this uptrending support has been lost. So the trigger for a move towards 19,200 is going to be a loss of 19,800. Until then, this is going to be a possible support zone. If we go down to a small time frame like a 5-minute chart and invert the chart, you can see a very obvious pattern developing. This is an exhaustion pattern, guys. We're seeing highs over here, we're seeing highs, and we're seeing dropping momentum, okay? Dropping momentum from this point. Therefore, we are in fact in a reversal structure, right? We are starting to see a reversal, or at least a weakening of this downtrend at support. Again, this isn't me saying we're 100% going to see a bounce, but this is me saying we should be aware that 20k is support and a potential for a bounce could develop from here, and thus we are going to be looking for indications of a bounce, okay? Currently, looking at the hour, looking at the 4-hour candles, looking for a break back above this range at 20,500 could facilitate a continuation back to retest 21,500. Let's go ahead and do a TA, guys, on the 30-minute chart. Same indicators. RSI massively oversold. You can see slight bullish divergence is developing as we have rising RSI and descending price action. Again, not strong enough to really suggest anything until we reclaim some of these highs over here. But again, something to keep your eyes on the short term. The VRPV is very spaced out right now. We don't have a lot of volume in this range. I'm going to try to zoom in a little bit. You're going to see immediately after we break above this local high, we do drop off significantly in that volume range, again suggesting a low liquidity range in which the price could push back through quite easily all the way back up to 21.5k. Now, just because we get back up to 21.5k, if we bounce, that doesn't make us bullish, right? That doesn't make us bullish. What would make us reverse this overall downtrend? We need to break above the downtrending resistance. The downtrending resistance we can draw from this local top across these resistance points right downwards. So a break above 21.5k will not make us bullish. We need to break above this downtrending support line or this downtrending resistance line to flip this current downtrend we're in. Until this downtrend flips, like I said a few days ago, we're going to be continuing down until we flip this downtrend, which could potentially lead to a reversal. Keep your eyes on that, guys. So short term is not looking amazing right now. We are, of course, seeing that 20k retest. We are, of course, seeing again a little bit of strength glimmer, a little tiny glimmer of strength, a little tiny glimmer of consolidation and compression at this range, as there is now significantly more orders. But all in all, the price is still looking weak. The price action is still looking weak. And if we do lose 19,800, we can expect that next move toward the downside to commence. I'm going to leave the video there, guys. I went a little bit longer than expected today. We didn't get through everything I wanted to talk about, but we got through enough of it. If you got any questions, leave them down below, and I'll catch you guys in tomorrow's video. Be sure to check out the Crypto Academy. You can find us on here, on our website, link down below. Contact us via email for more information. We teach you how to trade. We teach you everything in between, from TA, market psychology, risk analysis, and risk management. You can go ahead and contact us via email, and we'll send you all the information. With that being said, thanks for tuning in. I'll catch you guys tomorrow.